There are only really two types of trading strategies. Hi, my name is Hugh, and in this video, I'll share with you what those two types of strategies are and why it's very important to understand that fact. It took me a while to figure this out, but once I did, it made all the difference in my trading. So I want to save you some time by giving you that information in this video. And if you don't understand this information, you will fail at trading. Here's why. Alright, so maybe you think I'm being dramatic about this, and if you've watched any of my other videos, you know that I'm not dramatic. This really is one of the most important concepts that you can understand in trading. So let's get into it. Okay, so there are only two types of trading strategies. Why does this matter? So first of all, you could be expecting results that are simply not possible with the type of strategy you're using. And if you don't know which type it is, then you're going to be a little lost there. Next, you could be limiting your returns by hanging on to a false understanding of the type of strategy you're using. So you might be limiting yourself based on a preconceived notion of the type of strategy you're using. So that's something I want to help you get over in this video. Next, you can think that a strategy doesn't work when it does work if you just adjusted your mindset a little bit. And you'll understand what I mean as you watch this video. And finally, understanding this fact will prevent you from endlessly hopping to new strategies without understanding what works. And that's the worst thing in trading. That's the kiss of death, basically. When you jump from strategy to strategy to strategy, never really optimizing each one or figuring out why it will work or it won't work for you. So that's something that I want to help you prevent also. All right, so these are the two types of trading strategies out there. There are only two types, period. The first one is a discretionary strategy, and that could also be called a subjective strategy. And I'll get into what that means in a moment. The other one is a mechanical strategy, and that could also be known as a fully automated strategy. Now, one thing that trips people up in trading, and it tripped me up in the beginning, was a lot of educators will say, I have a trading strategy that is 100% rules-based, right? I'm sure you heard that before. And what they are implying is that the strategy is mechanical. But when you actually look at the strategy, 9 times out of 10, it's not mechanical, it's discretionary. So that's something you have to understand when you're learning these strategies, or you won't be able to get the most out of your education. All right, so I'm going to define a mechanical strategy first because that's easier. A mechanical trading strategy is a strategy that can be 100% programmed into a computer, period. That's it. If you can't put it into a computer and make a computer program out of it, it's not a mechanical strategy, it's a discretionary strategy. Which brings me to discretionary trading strategies. So a discretionary strategy cannot be programmed into a computer, and it requires the trader to use their own judgment or skill to enter and exit trades. So if you hear any of the following, it is automatically a discretionary trading strategy. So this includes anything with support and resistance, anything with chart patterns, candlestick patterns, fundamental analysis or news, or something that requires you to make a relative value comparison between two markets or two things in the strategy. All right, this is the most important slide in this presentation, so please pay attention because this is the difference between success and failure in trading. First of all, many traders think that they have a mechanical strategy, like I mentioned, when they really have a discretionary strategy. And this is the biggest misunderstanding when it comes to trading strategies. Now, if you have a discretionary strategy, you cannot expect the exact same results as someone else. You have to practice and improve your skills, and this will not happen just by learning a few rules. So this is kind of like any sport, right? Like learning how to shoot a basketball. You can watch all the videos. Somebody might actually have a strategy for like where to put your elbow and how to position your fingers and how to follow through with your hand. But in the end, it's a skill that you have to go out and practice. You have to practice multiple times, day in, day out, and then you'll get good at putting the ball in the hoop. So in a similar way, a discretionary strategy requires the input of the trader, and that is a skill that needs to be improved. And the final big misunderstanding with strategies is that you cannot expect to be 100% certain with a discretionary strategy. You have to learn how to trust your skills. With a mechanical strategy, there's a defined set of rules that you follow, right? But with a discretionary strategy, it's all about, okay, what does my experience tell me about this trade that's coming up? What have I seen in the past that might be similar to this? And that's where you're building the skill of trading. All right, so the next question you probably have is, which one is better? Which one is more profitable? And in reality, both of them work. Both of them can work. But the key thing to understand here is that you have to find the one that works best for you. Some people can do both, but generally speaking, people will gravitate one way or the other. Now let's get into some benefits and downsides of each type of strategy. So the benefits of a mechanical trading strategy are that backtesting is relatively fast. Second, the results are usually reproducible between traders, and that's one big issue with discretionary strategies, right? People say, oh, this doesn't work, but they don't take into account that there's an element of skill and discretion there. But with a mechanical strategy, it's reproducible between traders. And it's easier to optimize a strategy because it's a set of rules. So you can just change the rules, tweak the rules, test it again. Next, and this is what most traders are interested in, is it can be turned into a fully automated strategy. Once you have a mechanical set of rules, that can be turned into a fully automated trading strategy. And then finally, there are minimal emotions involved. You just have to decide when to turn the trading strategy on and when to turn it off. And that's the only decision you really have to make once you've created the strategy. Now, there are going to be some downsides with a mechanical trading strategy. Most trading strategies cannot be made mechanical. And this is something I have to emphasize because a lot of people think that all trading strategies can be mechanical, and they cannot. In fact, most trading strategies, I would say, cannot be made mechanical. So it can be frustrating to find those few strategies that do work. And there are strategies that work, obviously, but it's going to take a lot longer, in my opinion, because the number of strategies that you can actually program into a computer are going to be far less than the strategies that you can just basically take a look at the chart and kind of read price action or read anything about the market that is discretionary. So that's something that you need to understand about mechanical trading strategies. Next, mechanical trading strategies are not flexible, so they cannot change with evolving market conditions, and a discretionary strategy can. Next, there is still emotion involved. A lot of traders like mechanical trading strategies, or they're drawn to those strategies because a lot of people say, oh, it eliminates emotions. Not true. There are still emotions involved with mechanical trading strategies. And that is because if your mechanical trading strategy is losing, there's going to be that fear, right? Fear is going to creep in, and there's going to be that temptation to turn the strategy off. Next, you usually need to learn how to program to create a mechanical trading strategy, or you need to learn how to use a no-code backtesting platform like Naked Markets. I think that's a fantastic way to start with these mechanical trading strategies. There's a link in the description below if you want a discount on that. But either way, you're going to have to learn a platform in order to create these mechanical strategies. And it can take some time. There's a big learning curve in the beginning, especially with programming. So that's something to take into account. And finally, there will be doubt as to if the strategy has stopped working. So even if you had something that backtested well in the past, going forward, there might be doubts. And again, that's where the emotions can come into play. Now let's jump over to the discretionary trading strategy. So first of all, like I mentioned, you will have more strategies to choose from because there's a bigger universe of strategies available that are discretionary as opposed to mechanical strategies that actually work. So that's something to take into account. Next, a discretionary strategy can adapt to market conditions because you are reading the market conditions with your skill and with your own knowledge instead of relying on a fixed set of rules. Now here in discretionary trading, you don't need to learn a programming language. You can get started with a backtest right away. And I have a ton of backtesting videos on my channel, so check those out on the playlist. I also give you free and paid backtesting platforms that you can use. So it's really easy to get started with discretionary trading. And the final big benefit of discretionary trading strategies is that in the long run, you'll have more confidence because you understand a core principle of the markets. Now, that core principle could be price action. It could be how the market reacts to a certain moving average or something like that. But you'll understand the market at a deeper level, at least in my opinion. Now, here are the downsides of a discretionary trading strategy. First and foremost, it requires emotional control. So you're going to have to develop your emotional control while you're trading because there can be a lot of ups and downs. And that's something that comes along with learning the skill of discretionary trading. Like I said, you have to put in time to develop your skill, like shooting a basketball. This does take time, and you do have to get in front of the screen and actually do this in a demo account or a simulation. And of course, a discretionary trading strategy cannot be 100% automated, although parts of it can be. So what I really like about discretionary strategies is you can take a piece of the strategy, say the entry or the exit, and you can create an automated part for that because there are a defined set of rules. for the entry or the exit. So for example, maybe you have a automated exit, but the entry is discretionary. So that really can free up your time because all you have to do is put in the trade and then let the EA or the robot or whatever exit the trade for you. And that's one way that you can start to eliminate some of the emotional input into a discretionary strategy and save some time. Next, there's less certainty in the beginning when you're taking trades. Because it is discretionary, you won't have that skill in place yet when you're first starting out. So you'll be a little bit more skeptical of if you should take the trade or not. And that's just something that comes with trading. It's like any other sport, right? Going back to the basketball analogy, when you first start learning basketball and maybe you join the high school basketball team, you're going to be unsure of when to take a shot, or maybe you're taking too many shots. And improving on that comes with time and with practice. So now that you know that there are only 2 types of trading strategies out there, I invite you to choose one and start working on that one. Doing this will dramatically improve your chances of becoming a successful trader, and it will make the process a lot more fun. So if you found this video useful, share it with somebody who you think it would help. There are some links in the description below to get more information. Also check out my playlists for specific information on any of the topics that I've talked about today. And if you like this video, give it a thumbs up, subscribe and hit the bell to get more videos like this. And thanks for watching.